Submarkets, areas of interest for 2023, like strategies that we think that are going to work with the market softening, interest rate environment. So a lot of like that stuff. That's what you wanted to touch on. Cool.
Yeah, definitely. Just to give investors something to grab, some little submarkets to look at heading into 2023 relating to their specific strategies.
I know that you were kind of preparing on that. What did you have, at least like an initial thought, or like what was like the golden nugget thought that you came up with? Because I feel like there's always one of those, you know.
Golden nugget thought is that there's way too much demand and still market growth, especially here in the DFW, for prices to really drop. So to take advantage of that, of the slower markets, really focusing on the new build sector, new build / 2015 and newer. So if you can lock in like a 10 to 50% discount in those specific submarkets that are really booming around the DFW, specifically the top 3 to 5 school districts that have the highest projected growth rate. Those are the ones that I was really kind of digging into a little bit. Forney, Northwest ISD, and Denton, those ones.
Forney, Northwest ISD, and Denton are like your top 3 that you're kind of looking at. That's where Kendall went to high school. Did you not? She went to Northwest.
Yeah. So anything like north of Fort Worth along the I-35 corridor up through Denton. I think there's a ton of opportunity there and projected growth. So I think it's just a bulletproof play to lock in a 10 to 15% discount with a motivated seller in that school district. You're going to be sitting on 150K plus of equity in the next 5 to 10 years.
I like that a lot. That's really good. I agree with that 100% in terms of the opportunity that we have in new construction right now, because for the past 4 years, investors couldn't touch new construction. It was selling way too hot, and most builders weren't even selling to investors, you know, and you had zero leverage in terms of a negotiation. It was, here's the builder's contract. We're 9 months out on our build timelines, and maybe we'll hit it, maybe we won't. Take it or leave it. And people are just cooking, you know?
Yeah.
So now we've got builders out here who are trying to move inventory. The market has softened. Retail buyers are scared of a 7% interest rate. And there's a lot of opportunity in that new construction space or recent construction space, like you said, a 2015 or newer, for to hop into. I totally agree. I think that's a great spot to target on.
Specifically, I know you were all over this market for a couple of weeks, but Forney is just booming like crazy. They'll have 4 new elementary or middle schools built by the end of 2023 or 2024, projected to double their student population in the next 8 years. One little project that they have going on, I think is really, really cool. It's called the OC. Have you read into that?
Yeah.
The occupation or the opportunity central. That's what they're called. Opportunity Central. It's a 375,000 square foot hub for entrepreneurial space, restaurant, retail space, just an opportunity for students to get real world experience every single day.
Yeah.
Which I thought was just a really, really good selling point for a lot of people moving in from all different parts of the country, seeing that specific facility that's opening up in fall of 2023. So it might just be a really good spot for investors looking to park 50 to 100K cash right there.
I agree. We did a half dozen deals in Forney, all new construction, once the market started to soften for our investors. And like, you could still buy sub $300,000 new construction houses that lease out for $2,500 a month. And it has a full year builder warranty depending on the builder, but Meritage has a huge presence out there. I don't know what some of the other big builders are out there, but I know Meritage has at least like 3 or 4 communities that they're very investor friendly. I'm excited for that market, definitely. And I know a lot of people invest alongside certain retailers, right? Like somebody might look at where Whole Foods is planning to establish locations or whatever it is. In Texas, we love H-E-B. Wherever there's an H-E-B, that is like gold star. And there's a big old H-E-B right there. So that's another great indicator of the growth in the marketplace.
Gotta love H-E-B. What are you seeing down in Austin and San Antonio markets?
A few things. So Austin in particular, we've seen a big pullback in terms of demand, and we've probably shaved between 10 to 12% off of median list price. Austin, I've seen the biggest softening out of all 3 markets, DFW, Austin, or San Antonio. I think the big opportunity, though, I feel like this is very much a plateau, and it'll depend what Austin's legislation looks like going forward, and like how aggressively we start to regulate landlords. And I know there's a lot of different like regulatory elements coming down the pipe for Austin. And I'm a little nervous about that. Like I personally, the only spot in Austin I would probably still buy is in the ETJ, the extraterritorial jurisdiction, because they're not governed by the city of Austin. They're governed by Travis County, right? So they don't have near the stipulations for like if you want to build or make additions, whatever it is. Management has been way easier. So I would probably still do ETJ purchases in Austin, but the city of Austin, I'm a little bearish on. I think just the legislation is going in a negative direction. I really, really like the corridors south of Austin along 35 going for San Antonio. Like New Braunfels, killer. San Marcos is awesome. Probably my favorite market is Lockhart, Texas. Lockhart is a market that has, let's see, it's a bodunk town, but it's only 10 minutes from the airport in Austin. If you go down 130 and you go directly south of the airport along 130, the tollway there, you'll hit Lockhart. Lockhart is the barbecue capital of Texas, and it's where Black's Barbecue was like domiciled. But there's really not a lot happening there. But here's like what I'm excited about. The regulators and like the city of Lockhart is aggressively recruiting big industry. For example, there was oh my gosh, I can't remember the name of the dang company. It was basically a chip manufacturer, and it came down to either Buffalo, New York, or Lockhart, Texas, and it was like neck and neck trying to get the bid for this $30 billion factory that was going to come in, and Buffalo ended up getting it. But the legislation, the leaders in Lockhart have all been very aggressive about giving incentives and bringing in major employers, Fortune 100 companies or Global 100 companies. And they're like hell-bent on getting a major manufacturer in Lockhart. And right now, nobody talks about Lockhart. It's very much under the radar. You're going to have natural growth just because of the proximity to Austin. But I think once they do land that key tenant, that key employer, and they've got a $30 billion development going on, you'll see prices like they're gone. You know, there was that 20 plus unit deal asking 2.6 million, totally turnkey, multifamily in a beautiful area of Lockhart. It sold for 2.6. It was fully occupied. It had over $20,000 a month in gross income, almost a 1% rule deal, which you would never even touch if you were just 10 minutes north. You never even get close to that. So, like, I think there's a ton of opportunity there. It's very under the radar, and it's very much you can get good cash flow now. It's a long-term buy. So I'm excited for that one. It's going to be cool. It's going to be really cool once they do land that key blow. It's gonna be awesome.
I think those are good nuggets.
I do think that we'll see. I've seen rates really start to plateau recently now, really falling in that 7 to 7.75 range. And I've definitely seen buyer confidence start to come back in a lot of markets. So here's the last piece I kind of wanted to say. Markets tend to mature over time, right? And real estate aggregates into fewer and fewer hands. If you look at really mature markets like in Europe or Asia, a lot of those areas, and rent to owner distribution might be 75% renters to 25% owners, right? In America, we've been so used to this idea that everybody should own their own home and like the American dream. And we were, 75-25 owners to renters. We are getting so close to an even distribution now, 50-50 of renters to owners. And I think within our lifetime, within the next 15 to 25 years, we will see a big skew and real estate will continue to accrue and aggregate into fewer and fewer hands. And we're going to have a nation of renters, which isn't necessarily a bad thing. Most economies mature over time, and that's where they tend to move anyway. That's natural progression. But our country's relatively young, especially the European economies. So I do think we're going to see real estate fall into fewer and fewer hands. And now, if you go to London and you try and buy a 600 square foot condo, you're paying 2.4 million. So it's insane. Like people don't buy there. And I think that's what's going to happen here. Like real estate should be collected now. It should be held on to. And this softening that we have, I think is one of the last real buying windows that we're going to see. Think about it. We have a relatively normal, 3-bed, 2-bath, 1,600 square foot home in a decent school district selling for $450,000 to $500,000 as a starter home. Whereas just 10, 15 years ago, that $500,000 home was your forever home. And it was 3,000 square feet in a beautiful area. And now those homes are selling for 1.6 million. And I think once we see another little bit of a run in price, let's say rates come back down to 4 and we have another strong bull market in the real estate market, and we see prices run another 20% 20%. 20% above 500,000 is now 600,000. And you're flirting with jumbo loans just for your starter home. You know, so I think, and now with our country being so much more fluid and people wanting to get it, like they're traveling and they're not marrying until a much later age, all these things, I think that's going to compound and grow on itself. And this really may be one of the last really feasible buying opportunities that we have as investors. And it sounds dramatic, but I really think that's what it is. I think that's why I have such a sense of urgency. Whenever I'm like working, I'm like, the window is closing. I see it closing every day. I'm trying to buy a starter home or like a single family investment property for $350,000, knowing that it'll only rent out for $2,100 a month. And you hear it so pervasive with every single investor we talk to. It's like, I just can't find anything. It's too expensive. It's not an anomaly, right? It's not like you are the one who can't find anything. Those properties don't exist, right? Prices have gotten so aggressive and rents have not caught up. It doesn't make sense to rent instead of purchase, or it doesn't make sense to go ahead and purchase when you can keep your living costs relatively low with rents. But it won't stay like that, you know? Like it is changing rapidly. So gotta buy all the real estate that you can for the next 10 years. Just keep buying. There's a book, look it up. I forget the author, but it's really good. Just keep buying. It talks about all kinds of asset classes, but it talks about a lot of those ideas about opportunity and opportunity costs and all of those things. But anyway, did I answer? Was there a question? Did I answer a question?
Yes.
Okay. So anyway, that's that. All right. Well, we had a good 15 minutes on that one. We had 30 minutes on personal goal setting and running. So these will be some good episodes. I'll shoot there and we'll keep it rocking. All right, brother.
All right, dude.
All right.
See you later.
Bye.
Stay hard.